Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain.
Hello, everyone, and welcome to this edition of Crypto and Blockchain Talk. Well, it's another fun day in the world of crypto and blockchain. And of course, just in finance in general, the crypto market has now lost $2 trillion in value. And of course, have companies who, like Coinbase, who are laying off their employees, which is actually quite sad. But of course, they've put another press release out just recently saying that, of course, the company has no risk of bankruptcy. We'll talk about that just a little more in a moment. But what I will do is first and foremost tell you that I have a really interesting man on the podcast today. Not only can he give us a wealth of insight, not just into what's happening out there. I think he's going to have a lot to say. I just get this feeling we're going to have an amazing conversation. But he's also the CEO and co-founder of the TrustToken. Their protocol, which is called TrueFi, just like
That's right.
DeFi. Oh, there you go. So TrueFi is really doing some very interesting things, and we're going to go over that as well. And I want to introduce at this point Rafael Cosman. Rafael is, like I said, the CEO. So welcome, Rafael.
Thank you very much, Aviva. It's good to be on. I hope I don't disappoint.
I have a feeling you're not going to disappoint. It's going to have a lot of insight. It's going to be very educational, and I'm hoping we're going to crack open some of these news pieces and really allow for us to just look around and see how we can bring another light, maybe another viewpoint to what is going on out there. Because, you know, for people who are just new to the space, it's all very scary. You know,
It absolutely is.
Yeah. So go ahead. Tell us why you think it's scary.
Well, you know, as you just said, the global stock markets are crashing. Bond markets are changing massively. Crypto has crashed a huge amount. But I will say that for folks that have been in the space for a while, you do get used to this. You know, the joke is that in other industries, they call this a recession or a crash. In this industry, we call it a Tuesday. And you have to get used to these kinds of ups and downs if you want to play with these kinds of game-changing technologies that are inherently, they're going to get overhyped, and then they're going to come back to reality, and then they're going to get overhyped again. And that's how it goes.
So you need a lot of underpants. You have to be able to change frequently. But, you know, I don't know. What do you think? Do you think Michael Saylor is right now investing into some kind of Fruit of the Loom stock or... Fruit of the Loom, everyone, by the way, is an underwear manufacturer who I don't even know where they're based in the world, but I think it's like America's #1 underwear brand.
Yeah. Look, I think he's probably buying cheap cryptocurrencies where he can find them. Things that are on sale today.
Oh, well, we know that there's probably a lot of that. Matter of fact, we'll talk about that for sure. So your company, TrueFi, has already given $1 billion in unsecured loans?
That's right. So yeah, and just to clarify, so our company is called TrustToken. Our product is called TrueFi. It is a little bit confusing, and we probably need to change the company name at some point to make it a little bit clearer.
Wait a minute. Hold on a minute. No, as a marketer, I have to discuss this with you. So wait a minute.
Yeah.
So the product is TrueFi, and the company is TrustToken.
TrustToken, exactly.
Yeah, I'd say you need to get your marketing team together.
Yeah, I don't know. Look, Aviva, if you know a great marketer, we can. Our marketing team is working on it, and I agree the names are a little bit confusing.
Yeah.
So
yeah, I'm a marketer who likes things really neat and tidy and in the same package because life is confusing enough. And as you know, which has been proven by Booking.com, people need to be spoon-fed on a daily basis. That's a good thing. We've discovered that. So let's get back to this $1 billion in unsecured loans, which apparently have been repaid with zero default. You got to bring that home for me. Explain that to me, how you've done that.
So big picture, our company is in the DeFi space. We see DeFi as better technology for doing financial transactions, all kinds of financial transactions, whether that's secured lending, unsecured lending, trading, all kinds of different things. We think DeFi can do it better because you have lower transaction costs, you have faster speeds. There's just so many inefficiencies that I think we've all experienced in traditional finance that DeFi can improve upon. It's basically if you were to build this sort of financial infrastructure today using 21st century tools, that's what DeFi is. So our particular product, TrueFi, is one of many large DeFi protocols that are focusing on different parts of finance, different kinds of financial transactions that they can streamline. And TrueFi focuses on, as you said, unsecured lending. So the protocol, we launched it about 18 months ago, near the end of 2020. And since it launched, it has originated 1.66. We just passed $1.66 billion of loans originated. That's all directly on the blockchain using stablecoins directly to borrowers' Ethereum addresses. And of that, we've already had $1.2 billion repaid with 0 defaults. So this is that's still small compared to the global world of lending, which is in the trillions. But being able to originate and have $1 billion repaid without any defaults, that demonstrates that this technology really does work. It can provide a very significant and attractive return to our lenders and really gives us a platform to be able to scale this up and hopefully at some point you bring the majority or all of lending on chain in technologies like this.
I'm not even sure there has ever been in the history of mankind any company that does any kind of lending that can claim 0 defaults. I'm matter of fact, because there are people in my family who are in the insurance game, I can almost guarantee that that's a never ever happen scenario.
Well, yeah, everyone has defaults at some point, and as we scale, I'm sure that we will have many, many, many defaults, right? You don't have a lending business without some defaults at some point. And the idea is just that the asset managers that work on our protocol, that they are running credit strategies, end up with an attractive return, even taking into account whatever that default rate ends up being. We've probably gotten somewhat lucky up until now, but we also have really high quality asset managers on the protocol that have been doing really. So I think it's a combination of the protocol and the system being built well, and also just a certain amount of luck that has led to us having 0 default so far. We have dollars of loans originated, but we still will aim to maintain a low default rate that's going to make the platform overall attractive for lenders, and hopefully be able to show that this technology and this platform really can bring something that's new and exciting to how finance works.
Okay, so let's just talk about the elephant in the room right now. The crypto markets are through the floor, right?
Yep, they are basically through the floor. That would be accurate.
Yes, it is. It is.
Well, actually, I would say maybe they're at the floor, and we might be going through the floor in the next couple of days or weeks.
I accept that, and I will go with that for sure. So I got to ask you this question. Well, there's a number of questions I have, but let's start with this one. So why would anyone right now, in the first instance, want to even get engaged within the cryptosphere? And 2, why would somebody want to engage in DeFi when DeFi is kind of the cryptosphere on steroids in many instances, in that you have to know and understand so much more to entertain the DeFi space. So do you even, oh God, this is a 3-pronged question. Let's see if I can, I'll have to reiterate probably all 3 of these to you, but you're a smart guy. You'll remember all 3. So, I mean, is it the case as well that, this, everything to do with DeFi at this moment is looking like it might have to pull back on itself, because DeFi is very dependent, I think, on people staying in the market, and it looks like a lot of people are retreating from the market space.
Totally. Aviva, I think that is a great question, and something that probably a lot of people are asking themselves right now. Should I even be in crypto? And I would say I think this is the time to be in crypto. First of all, financially, the lower asset prices are, the more attractive they are as investments, not the less. And that's something I think a lot of investors forget, a lot of let's say real estate retail or more amateur investors forget, and I think something that professional traders know is that when there is blood in the streets, that is the time to be buying. And when everyone is hyping something up and is super excited about how Bitcoin is going to the moon, that is the time to be holding or maybe even selling because things are probably overhyped. But I think that to a certain extent applies to people's application of their time and their effort as well. Because what we've been hearing from some of our investors, who include folks like Andreessen Horowitz, Block Tower, and many others, they've been saying that it's this kind of bear market when they see the best companies and the best projects emerging. Because if you look at actually after the 2000 dot-com crash, there was a similar pattern. There'll be a lot of hype, a lot of noise, markets will get pumped up super hot, and then there's a crash, and that's when a lot of that noise washes out, and there's just pure signal. So this is the time when the builders get building, when people that are serious about making great products are making great products. And if you are an investor, if you are a builder, this is actually very exciting news.
Well, I was reading an article. Of course, we know we've reported on here. I think there's a whole podcast dedicated to El Salvador's Bitcoin, what's the word I want to use? Adventures.
Yeah.
But, their holdings are now valued at $51.5 million, and that's worth about half of the $104 million that the country invested in crypto in the first 10 months that, since they made their Bitcoin legal tender, which was, I think, last September.
That's painful.
So, yeah, it is painful. But if you want to hear somebody who is obviously, he's the eternal optimist, because El Salvador's finance minister, whose name is Alejandro Zelaya, I love that name, said that their Bitcoin losses posed extremely minimal risk to their country's fiscal position. And he said that amount was less than 0.5% of the government's budget. And he said that any loss for now is unrealized because the country hadn't sold any of its coins. There are a lot of comments on Twitter who are basically saying it's not a really good way to kind of present all this, and that they can see the country going through the floor if things don't pick up, and that it kind of doesn't make sense with that very optimistic quote that he gave to the press. You, of course, have Miami, who has been very, very vocal about, utilizing Bitcoin. Of course, we have El Salvador, and there's a ton of other places we could be talking about. But do you think it's a good idea at this stage for any country to be saying, do you think it's a good idea that El Salvador says things that, like, these Bitcoin losses pose extremely minimal risk to their country's fiscal position?
Well, I think that is a fair statement because, it sounds like they didn't make such a large Bitcoin investment that it's going to really harm their financial situation if that goes to zero or they take a large loss on it, which makes sense. And I think that's problem. Also, I do think that they're probably taking the right trading strategy of during a market downturn, that's when you hold or when you buy, not when you sell. Mm-hmm. And I think that it's the weak hands that lose money. And I had to learn this lesson the hard way. A couple of years ago with a small amount of money, I bought some Bitcoin near the 2017 peak, and I sold it at some point during the winter. Mm-hmm. And then, 2020, 21, 22 came along, and I looked back and I said, wow, okay, that was a really interesting experience. That is exactly how retail traders lose money and how professional traders make money, because psychologically, it's very tempting to be bearish during this kind of market, as opposed to realizing, okay, this is when there's actually more upside than there has been at higher prices. So overall, I like it, and I think that it's it's a natural part of markets coming more back to reality as we continue to build great products and get to the point where crypto has enough traction to genuinely justify the giant, $2 trillion, $3 trillion market cap that I think it will at some point again have.
I think there's a plane landing above you.
It's some helicopters are flying by.
Oh, goody.
That's the downside of living in San Diego.
Oh, goody. Well, no, I think it's really cool. I have an addiction for anything that flies, but there you go. So
me too. Aviva, let me speak though to the other question that you asked earlier about DeFi. I think part of what's exciting about DeFi is that, a lot of people and countries, as we've been discussing, they're interested in crypto in order to invest in the assets. And that's fine. Or use it just for payments, and that's fine too. But I think that part of what's exciting about DeFi is that it shows when you have a better technology for doing financial transactions, just like how the internet was a better way to move information around the world, we now have a better way to move money and value around the world. That unlocks all kinds of applications that go way beyond just buying the next token or sending some coins to your buddy. You can do trading on the blockchain. You can do lending on the blockchain. It's all kinds of things that traditional financial institutions and banks used to do, we can now do in a much more transparent way on the blockchain. And that's what DeFi is about. And I think it is one of the most, I don't know, Aviva, if it's the area that you are most excited about, but I think it should be because DeFi is, I think, one of the most solid places within crypto where crypto is going to be providing real tangible vast hype as many people criticize crypto of being.
Well, so before we go any further, I'm going to do the disclaimer, okay? And nothing that we are talking about, that Rafael or myself are talking about on this podcast, and by the way, my name is Aviva Ounap. I'm the host of Crypto and Blockchain Talk. I should have maybe done that earlier. But nothing...
Whoa. I don't get to be the host?
No, you're the guest.
You can host it. It's fine.
Thank you. But nothing that Rafael or I are talking about on this podcast can possibly be construed as investment advice. We are not giving investment advice. If you need to do anything, it is called your own homework. You need to do your own homework. You need to do your own due diligence. And you need to find a professional financial advisor if you don't understand what you are reading. And if your professional investment advisor cannot help you in the crypto space, find another one and keep looking till you get someone who knows what they're talking about. So,
and I'll add to that. Look, Aviva,
please do. Not
only are you and I not giving investment advice, even if we were, people probably wouldn't want to take it anyway. They should be going and asking someone else.
Well, I do have to tell you, I've been spot on about almost everything.
All right. Well, look, let me subscribe to your updates. I'll buy the coins that you recommend. Although, Aviva, actually, it sounds like you have a history of calling the scams, which is very interesting. So we should talk more about that at some point.
Oh, yeah, that's another conversation altogether. Gotta really, man, listen, I'm coming back as Venom in my next life. Don't worry. So,
good.
My favorite Marvel character of all time. They need to do 50 Venoms, but that's, again, another podcast. So as we know, on Monday, there was this heavy crypto sell-off in the markets, and that caused major ripples for all the projects. And that also, it impacted DeFi. You had...
Absolutely.
So Aave, their utilization rates fell, and that was nearly across all their stablecoin borrowings. And Binance USD, now borrowings for Binance now stand at 30% compared to a high of 80% back in May. Okay?
Yeah.
So, and I should say that the utilization rate, by the way, is the ratio of borrowed to deposited funds. And since borrowers are always required to post collateral before taking out a loan, and this is probably, on many different DeFi platforms, and also the same on Aave, but users are likely withdrawing, because of Monday's sell-off, because they have to prevent liquidation. Yeah? So,
a lot of them
do. Yeah, absolutely. So that's, I think, one statement I want to make. But what I also think is interesting is that JP Morgan is really now, they've just put out a whole bunch of press releases about how they believe in integrating DeFi products and this is going to really bring them they're looking for ways to actually bring DeFi even more so into their portfolios, and that shows that they really do feel that there's there's a lot of game here. There's still a lot of legs here, and they are not willing to just say, okay, well, DeFi is having the whole marketplace is having a problem. We're going to just call it quits right now on the whole DeFi thing, and we're going to just take it easy. So they seem to, but then again, with another news piece, and I kind of alluded to this in the beginning, you have a lot, you have the Winklevi twins. Yeah, they're Gemini. They're having layoffs right now. Of course, you have, I mentioned CoinMarketCap, and boy, I must read 50 articles a day on CoinMarketCap, Coinbase. What am I on about? Yeah. I think I've drank too much coffee. Coinbase. So Coinbase, I must read 15 articles a day on Coinbase, and that's because I kind of have a downer on Coinbase. They have really customer service. I don't curse on this podcast, so that word will come out. But, even crypto.com, they said that they were laying off, 5% of their corporate workforce, et cetera, et cetera. With all of these different protocols and all these layoffs with these really difficult market conditions, like I kind of alluded to in the beginning when I said to you, why would somebody invest in the DeFi space right now? Right. Especially when it's kind of like, you still have this learning curve. First of all, you have to learn about crypto. Then you have to learn about DeFi. Even though there's a lot of people in the DeFi space, it's still a really tiny amount compared to, the overall population of the world. And even crypto in itself is small compared to what, adoption rates could be. But you really have to have a brain on steroids to kind of wrap your head around what's going on in the DeFi space.
So on that point, I think that it's actually that this is in some ways DeFi's time to shine, and specifically, I think what's called real-world assets. And it goes by a couple of their names, but really connecting DeFi into TradFi, like what you're talking about with JP Morgan. Mm-hmm. I think it's that sector's time to shine as well. Because you gave the example of JP Morgan's bet they're taking on DeFi. It's amazing actually that they just within the last couple of days, even during this huge crypto market sell-off, they are talking about how large of a bet they are taking on DeFi specifically. So I don't know if you've read this, but one of the guys there who is the head of one of their digital asset groups, he specifically talks about tokenizing U.S. treasuries and money market fund shares so that they can be used as collateral in DeFi pools. That is exactly the right way to be thinking, because DeFi is a great way to do these kinds of transactions, to be able to take out loans, to be able to earn interest on your stable coins or other assets. But if you look at something like Aave that we just mentioned, they do collateralized lending, but primarily against crypto assets. So against your Ethereum, against your Bitcoin, against other stable coins. And so if you have a crash in the crypto markets, then all of a sudden you don't have nearly as much collateral there to borrow against. And Aave's, the total size of Aave's business shrinks massively. Mm-hmm. If you can actually use DeFi to borrow against your money market fund or your U.S. treasuries, that's a huge market that is not going to be subject to the volatility of an Ethereum or a Bitcoin. And that's where if DeFi can demonstrate that it can really beat out existing solutions in a market like that, in a market like borrowing against U.S. treasuries, which is huge. U.S. treasuries are a huge market, and people who want to borrow against them, who want to take leverage on them, who want to short them, is huge, huge, huge markets. If DeFi can win there, then we've really won. Then we're not just saying, okay, hey, here's another cool token that's exciting, but we're saying, look, this is a real use case that has been around for decades in traditional finance, and it's a place where the more advanced technology of DeFi provides a real benefit to traders, to banks, to traditional financial institutions, to consumers, to people that want to invest or trade in these kinds of assets. That's where I think DeFi is going, and that's the kind of thing that I think DeFi really can focus on. Some of these markets are very challenging markets to break into, like U.S. Treasuries. It's much easier for a JP Morgan to make a play in that space than, let's say, a startup like mine. But there are a lot of markets that are quickly growing, more emerging, that are still, in the real world asset sector, as opposed to just, let's say, lending and borrowing against crypto assets, that DeFi protocols like TrueFi can go after very aggressively. So I'll give you some examples. At TrueFi, we actually just launched recently a lending portfolio with this company called Chorus, which does lending into emerging markets. So businesses and consumers in the emerging market world. And we also launched one with a group called USDC.Homes that is actually providing bridge loans to people buying real estate in Texas.
Now that's cool. That's really cool.
These are very cool. So that's where now, hey, you can actually earn yield on your stable coin based on someone who is getting a mortgage for a house they're buying. And that's a yield that we can provide to you on your stablecoin that's not just powered by some kind of DeFi perpetual motion machine, but by a really well understood financial asset. But you still get the level of speed and transparency and efficiency of DeFi as opposed to what traditional finance has been able to provide, which is much more limited in that department.
Would you like to give a definition of what total value locked is?
Sure. Let me start with that, and then let's talk about layoffs. So total value locked is one of the main metrics by which people measure the size of DeFi protocols, such as TrueFi and Aave and many others in the space. And it basically says how much money has gone into the protocol and is locked there. And it's somewhat controversial as a metric because sometimes, for example, you could have a protocol that has money come in and then it lends that money out, and then some of that same capital comes back in again. And then you can end up with capital that gets effectively double counted under TVL. And so it is controversial as a metric, and the exact way to define TVL is something that's being debated very actively within crypto. But just so you get a sense of the scale of these things, TrueFi today has just a hair under $500 million of TVL. So $497 million of TVL today. And so that's the amount of capital that has been put into TrueFi. And of that, $458 million is loaned out. So there's a certain amount of capital that's just sitting inside. There's a total of $500 million TVL, just a little bit less than what we call TVO, total value outstanding. That's the total size of the loans going out. Aave, which we talked about earlier, they're a collateralized lending protocol. They've been around for a lot longer than TrueFi, are at a very, very impressive large scale. They're around $10 billion of TVL. And I don't know exactly what their TVO, what their loans look like today, but it's very, very significant. They're a giant protocol. Still very small compared to the size of some of these markets within TradFi. So even a protocol with $500 million or $1 billion or $10 billion in TVL, we're still talking about, a large firm in TradFi might have raised, $100 billion or more in assets and be doing hundreds of billions in loans. So we're still very small compared to comparables in TradFi. And so that's the sense in which, even though a lot of stuff has gotten built in DeFi and has been demonstrated to be able to work, we still have orders of magnitude to grow if this technology really becomes successful. So we are still, we're in a stage that's akin to the early days of the internet. It's exciting. It looks like it's going to work. There's a lot of stuff to be built, but if we're successful, we could grow easily by 100x.
You keep saying TradFi. Explain what that is.
So that's a term. TradFi, traditional finance. It's meant to refer to basically the finance that's not DeFi. And you could kind of think about it as there's TradFi, there's FinTech, which is sort of the, old school non-blockchain way of building financial technology. And then there's DeFi, which is the crypto way of building new financial technology. And so, it's my opinion, it's the opinion of many other folks in the DeFi world, that more and more of the world's capital and transactions are going to move into fintech and then ultimately into DeFi as these technologies mature. But still today, TradFi, traditional finance. So think, what JP Morgan is doing, think about whichever bank you hold your money with, whatever brokerage account you have today, that's TradFi. And still today, that's probably something like 95% of the entire financial world.
Okay, so here comes a little bit of a harder question. So, Aave's total lock value, Aave's TVL, has fallen from 33 billion, around there with change, from last October. So 33 billion from last October 2021 to 8 billion today. Now,
I think they've recovered a little bit. Right now I'm seeing them at 10.2 billion.
Are you? Okay.
Yeah. But still a tremendous drop from 30.
Yeah, it is. And the TVL in overall DeFi protocols, according to some articles, which I think there's like 5 of them out there that are written about this, has fallen by around 55% since the end of April. Okay, April. Now, this is even before, obviously, everything that's going out around with inflation and the overall markets, the falling of the S&P, There's currently 115 billions worth of funds remaining, and 72 billion, which is on the Ethereum blockchain, which is a fraction of that 300 plus change billion in peak, which was in November of 21. So, 2 questions now for you. Do you see TrueFi kind of mirroring these numbers, including what Aave's, what we just discussed with Aave and their decline? And the second question I'm going to ask you then is, what blockchain are you guys built on?
Okay, great question. So number one, we do see TrueFi having a somewhat similar decline, but every DeFi protocol is going to have its own timing with its ups and downs and its own amplitude for those changes. So our peak TVL was sometime last year at a little over $1 billion, and now we're at about 497 million. So percentage-wise, maybe not quite as significant as crypto assets, because that's what you're borrowing against on those protocols, but still a fairly significant drop.
What blockchain are you guys built on?
So TrueFi is built on Ethereum, like most, but not all of DeFi. And we just launched our first portfolio that's live on Optimism, which is an Ethereum Layer 2 solution. And we do think that we're going to be doing a lot of lending there because the whole point of Layer 2 solutions, they offer much of the security of Ethereum, not all, but a decent amount of the security of Ethereum, but with much lower gas fees. And so you end up paying a lot less to transact on a Layer 2. So that's where we think a decent amount of our lending is going to be going forward, and where a potentially significant fraction of all DeFi is going to be going forward is on Layer 2s like Optimism.
Okay, so I've got to ask you this then. Now, you obviously know about the news of a possible delay to Ethereum's transition to their proof of stake, yeah? So,
except the one thing is, I would say a delay in the transition to proof of stake could hardly be called news.
Yeah, it's not. I mean,
more shipping
news.
Proof of stake could be called news, but a delay, that's the default. Okay, you heard the joke about there's a time traveler that comes back from the year 2100, and everyone's asking him, "Wow, okay, so what's the state of blockchain in the year 2100? What tokens should we buy? What's going to be big?" And he says, "Dude, blockchain in 2100 is amazing. It's huge. Everyone loves it. And, one of the things we're super excited, Ethereum is going to move to proof of stake.
Oh, God, that's hysterical. Baboom.
So I'm not holding my breath. My fingers are not crossed. It's gonna happen eventually. But I will say, it's a competitive market these days for smart contracting blockchains, and Ethereum does need to move and to make improvements without compromising its security, the amazing platform that it's created. It does need to move if it's going to stay ahead of the pack. I don't think that Ethereum's position is guaranteed. I think that Bitcoin is the closest thing to a blockchain that really has a guaranteed position. Mm-hmm. It's not really competing on any specific features. It's just aiming to be super stable and secure and maintain a strong value over time, that store of value use case. But I think Ethereum's position is definitely assailable, and there are some very, very significant blockchains that are working on assailing it.
Do you see yourself ever transitioning off Ethereum one day?
I see us as looking to build the protocol for lending on the blockchain, regardless of which blockchain that is on. Mm-hmm. And so absolutely, if there was another competitor where we saw more activity and where we thought we'd be able to ultimately do more lending on chain, we would be all over it. And we are absolutely a part of the Ethereum community. We have multiple open source projects within the Ethereum community that are used by many, many developers worldwide. But that being said, we are not dogmatic about that choice. And our priority is winning the lending space. And so if that required us to move to another blockchain at some point or to have the blockchains that TrueFi is supporting, we would absolutely do that.
It says that TrueFi is the protocol for uncollateralized lending powered by the first ever on-chain credit scores. Yes. I want to talk to you about on-chain credit scores because let me tell you something. I'm not a fan anyway of credit scores because I think that they're very, they can be manipulated.
Yes.
So explain to me about these on-chain credit scores.
Okay, so let's talk about it. So this is one of the things that is most exciting about once you start doing lending on the blockchain. You have borrowers building up completely transparent, completely auditable records of their borrowing history. And they can then use that to get loans and to demonstrate their creditworthiness in all kinds of places. So I'll just give you an example. I have up in front of me the borrower profile page for Alameda Research that I'm sure many of your listeners know is one of the largest, most respected trading firms in crypto. And and I can see on their borrowing page on the TrueFi protocol, and this is completely open, completely public, anyone can see it. You can examine and you can see every single loan that they have ever taken from the TrueFi protocol and exactly what the terms were of those loans and how much interest. It's all completely open and available on chain. And it's a very significant credit history that they've built up in the last 18 months or so. The first loan they took was actually the first loan the protocol ever originated on November 21st, 2020. It was a $3.5 million loan for 30 days. And since then, they have repaid a total of $348 million of loans to the protocol. So, and that's across, 15, 20 different loans over the course of a couple of years, maybe a year and a half or so. So that's a very significant credit history that they've built up. And they're just one firm. There are many, many firms that have been borrowing for months and getting into years now from this protocol and from many other DeFi protocols as well. And that is on-chain credit history that they can then use to demonstrate their creditworthiness to this protocol, to other protocols, to off-chain lenders, to all kinds of folks. So what we think is going to happen long term, we think this industry is going to disrupt the entire credit bureau space. The Experian and so on, who are holding all kinds of credit data and managing it and selling it to banks and other lenders, we think that a lot of this data is going to move on-chain, and we're going to end up with essentially something that's more like an on-chain credit bureau that's going to emerge, but we think it's going to be much more transparent. It's going to put a lot more power in the hands of users and ultimately deliver a much better, much more transparent product for everyone. So that's where we think this is going. Now, the protocol that we're building is focused on just doing this unsecured lending and doing it as well as possible. And we don't have all of the pieces to solve the entire on-chain credit problem. We're building one piece. We do think that there are many other protocols that are going to emerge that are going to solve other pieces of this problem, including we actually have a partnership with Chainlink, and one of the things that we are working with them to develop is bringing more off-chain data on-chain. So we need to get off-chain data on-chain so that we can really lend against that data. But also, we need to actually generate more and more data on-chain by doing more lending on-chain. We need both those things to happen in parallel. But eventually, I think we're going to get to a state where we have a much more transparent, much more user-controlled credit system that's going to benefit everyone.
You mentioned trust. And one of the things where obviously trust was recently broken was, and we don't need to go over the Terra Luna stuff. So you, of course, have Terra Luna's UST, which we all know what's happened there. I'm just going to give a couple of news pieces because I don't know if you know this or not, but I'm going to give you 1 billion Aviva points if you can tell me where Tether... I know that you can do a lot with that. But you get 1 billion Aviva points if you can tell me where Tether has launched their new stablecoin, what country.
Oh, whoa! I don't know. I think I'm gonna miss out on these Aviva points.
Shoot! You're 1 billion Aviva points by good things. So you better just give a guess.
I know they have US dollar and euro. What would they do next? A Japanese yen? British pound? I don't know.
Nope. You only get one chance at those 1 billion Aviva points. Dang. It's going to launch their fourth stablecoin in Mexico, pegged to the peso.
Oh, wow.
Yeah. So,
cool.
I don't... USDT has a lot of issues. They print out of control. They constantly have to release reports because people are so afraid that their stablecoin is going to be depegged because of the amount they have in reserves, because they're supposed to be... Listen, I have a podcast called Pick What USDT is backed by, and it's like lollipop sticks, belly button fluff, or... So that's the title of the podcast, because right. I don't even... and everyone on all my listeners know this, I do not respect, I don't believe, I should say, their independent auditing firm. Not by a long shot, okay? Because I just don't, and that's for different podcasts, which I'm happy to do. Again, we probably need an update. But, and Tether's also continuing, they launched on Tezos, so they're like the third largest crypto by market cap, right? And then, of course, you have Justin Sun's Tron stablecoin, which is just recently, it's been wobbling. And Justin has been, hot off the heels of Do Kwon and what's happening with Terra Luna. He's sworn to deploy like an extra $2 billion to prop up his new USDD. Yeah, everyone's coming out with a stablecoin. It's incredible because people have lost a lot of trust in these stablecoins. And then all of a sudden you have all these things coming out. And launching in Mexico. So you have then the USDD, Tron's stablecoin, like I said. They lost their peg on Monday. It dipped to as low as 91 cents. And of course, I don't know if you read any of the tweets, but they were hysterical. And the funny thing is that apparently Tron's stablecoin is very similar to Terra's stablecoin, the UST, which of course we all know what happened there. So it's just all very interesting. And of course, and then you have USDC, which apparently is looking like it might give Tether a run for its money. It looks like it actually could be the one that people are leaning to, but it turns out that you guys have TUSD, which is your stable coin, and apparently also backed 1-to-1 by the dollar. So exactly. I've got to ask you this first question. It's a hard one, but are you really backed 1-to-1?
We really are. So for every TUSD in circulation, we have an actual dollar with an actual bank. We work with Silvergate, Prime Trust, and Signature here in the U.S., and with First Digital Trust out of Hong Kong, and they hold an actual dollar in their accounts for every single TrueUSD in circulation. And I will say, Aviva, when we launched TrueUSD, it was back in 2017. There was no USDC, there was no BUSD, HUSD, UST, nothing. The only real competitor in the stablecoin space was Tether, USDT. And we designed it from the beginning to be exactly what we think a stablecoin should be, as trustworthy a representation of the US dollar as possible. Now, I will say, I think that there's a lot of interesting work that can be done in the algorithmic stablecoin or crypto-backed stablecoin space, things like DAI or Frax. But I think that what a lot of institutions and individuals want is a stablecoin that is completely backed by US dollars, completely redeemable, that they know that they can trust. And that is what TrueUSD is. And that's what USDC, they launched after us, and I think that they did learn a decent amount from our model. They've done a phenomenal job and have grown the product really, really well. And I'm a big fan of both products. But TrueUSD, we're actually now working to take that trust to the next level. So we have actually a third-party auditing firm, a top 25 U.S. accounting firm called Armanino, that inspects the bank accounts backing TrueUSD. And they issue a real-time 24/7 report online showing that those bank accounts are fully backing TrueUSD. And we also work with Chainlink to actually take that data and put it on-chain. And now we're launching a new feature that we came up with our auditor and with the Chainlink team that we call the Mint Lock, which basically is building into the TrueUSD smart contracts such that they literally cannot mint new TrueUSD unless the third-party auditing firm, in communication with a network of oracles that puts that information on chain, unless they actually verify already that those new tokens are backed. That would mean that even if someone's literally stole the private keys that can mint TrueUSD, which are, of course, it's a multi-sig setup, it's very secure, that has never happened, but even if that did happen, they still would not be able to mint any TrueUSD that are not backed by US dollars in those accounts. So that is, I think that there's a lot more we could do there. I would love to keep going and just really figure out, okay, how can we make the most trustworthy possible stablecoin that billions of dollars of DeFi and other products can rely on? But that is the direction that we are pushing in, and that's the direction that we want to keep pushing in, is really making stable coins and making other products that are as transparent, as trustworthy as possible. That's where I think this industry needs to go.
Borrowers and lenders on your platform, they are using your stablecoin, TUSD, obviously, to do all of their activities. Is that correct?
So our platform, TrueFi, it actually supports a variety of different stablecoins. Right now it supports 4. So TrueUSD, of course, but also USDC, BUSD, and USDT, Tether. We, of course, I know. We both have mixed feelings about Tether, but here's the thing. It's actually very interesting as a lending product. Some borrowers may want to borrow Tether even to short it. So I'm not convinced that it is a perfectly safe product for someone to hold. But ultimately, TrueFi is in the business of being a lending platform, and we can actually support all kinds of assets. And our business is not really focusing on whether those assets are going to go up or going to go down. You might want to borrow them because you're going to short them because you think they're going to go down. But our focus is really on providing the best quality lending products with really good asset management and high quality borrowers that are providing hopefully very attractive returns on these assets. So that's the argument for why we are supporting Tether, and we could even support many other stable coins or volatile cryptocurrencies over time as well. And it's not an endorsement about whether those products are themselves trustworthy or good investment opportunities. So you can definitely argue with me about that, but that's the position that our company and our community has taken so far.
Darling, I would never argue with you about
Okay.
USDT. It would be more of a debate. In closing out, let's just talk about, first of all, True, which is your utility token, your cryptocurrency, which is obviously, it must play some kind of a role, which I'm going to let you explain, within that kind of lending and borrowing and everything else that is on your platform. So explain what you do with True.
True, is the governance token of the TrueFi protocol. So the way that many, if not most, DeFi protocols work is that they have a token, not a stable coin, but volatile cryptocurrency that is a governance token of the protocol, and people can actually vote on chain using that token for changes to the protocol. And then some benefit, some kind of protocol fee or something like that usually accrues to the holders of the governance token, such that the holders of the governance token are incentivized to vote and to govern the protocol in a way that's going to make the governance token and the protocol overall more valuable over time. And governance tokens oftentimes have other roles in protocols as well, such as staking and things like that. So that's the model that TrueFi and Aave and Compound and many other protocols take. Aave has the Aave token, Compound has the Comp token, TrueFi has the TRU token. So if folks want to get involved in actually building the future of lending on the blockchain and deciding what that's going to look like and figuring out what we need to build, what we need to make happen, what kind of partnerships we need to develop, that is a really good use for the TRU token. We literally just the other day had another major on-chain vote of TRU holders about some action that the protocol needed to take. So it's part of overall protocol governance and community participation in developing what we're building.
So I know that newbies into this space are probably going to be thinking, do I have to buy True as well as their stablecoin TUSD? Do I have to buy both?
Well, it's two different things. So if you want to participate in the governance of the protocol and in developing the future of what lending on the blockchain is going to look like, then holding some TRU token might make a lot of sense. And we'd love for you to come join our Discord, participate in votes, discuss pros and cons of different strategies. There's a very lively, active community that's happening around TrueFi. If you want to just lend in the protocol and earn a yield on your stablecoins, then you don't actually need any TRU. You just need some stablecoin, and that can be any of the four I mentioned: TrueUSD, USDC, BUSD, Tether. But part of the way these two things interact is that a lot of DeFi protocols like ours are interested in putting the governance power in the hands of actual users. And so even if you have no interest in participating in community governance, you just want to lend into the protocol, you will earn an attractive yield on those stable coins that you put in. But in many of our lending pools, you'll actually also earn additional TRU tokens on top of whatever you're earning from the lending. And the purpose of that, there's a large number of TRU tokens that are allocated for this kind of distribution to users. The purpose of that is both to attract more users into the protocol, but also to say, look, we want to further democratize this asset and ownership of this protocol and governance of this protocol. And so we are going to just start giving TRU tokens direct to all of our users. And yes, some of those users may choose to just sell the TRU token and pocket those profits, and there's nothing wrong with that. But many of those users will choose instead to hold on to some or all of those TRU tokens to get engaged in governance. We think of it as a little bit like, overall, we'd like this wave of innovation that's happening in Web3 to have a different economic impact and social impact on the world than what Web 2 did. And there was a ton of good made in Web 2. And I don't want to denigrate Web 2. I think Web 2 is phenomenal. But I think that there is a next level that Web 3 can take us to, and Web 4 and Web 5, whatever those end up being. But what we're looking to do in Web 3 is say, look, what if the first 20,000 Uber drivers and riders each got a little bit of Uber stock in addition to, their normal payouts from the Uber apps? Then those drivers, some of them could be millionaires today if they participated in the upside from the driving network that they were helping to build. That's not how it happened for a variety of reasons, but that is what DeFi protocols like ours are looking to do. And ultimately, it's a win-win. To a certain extent, it's a purely selfish thing, because when we put TRU tokens into the hands of these users and they then get engaged in the community, and then they go from not just being users, but really to being participants and owners and co-creators, you end up with folks that care much more about what you are doing, as opposed to just using it as, hey, this is just another product and I could leave this behind for someone else's product tomorrow. So that's what we're looking to do, and that's really part of what's exciting about all of DeFi, about these more participatory protocols that people are bringing.
I guess my last question is going to be, don't you want to incentivize people to use TUSD more so than the USDC or USDT, etc., that you also allow your users to use on your platform?
We of course love TUSD, but also we wouldn't want to limit the growth of TrueFi to just that one stable coin. Mm-hmm. We built TrueUSD so that it could enable all kinds of applications such as TrueFi and Aave and Compound and all kinds of other protocols that use TrueUSD. But we wouldn't want to limit the growth of those protocols. And so if there are other stable coins that come out, TrueFi should absolutely be using them. It should be a generalized protocol for doing lending on the blockchain, not a protocol for just lending TUSD on the blockchain or just lending USDC on the blockchain. If it does, we really wouldn't be achieving our vision of truly changing how lending works globally and how capital moves globally. We would just be building an interesting way to leverage a single asset. So I think at some point, this protocol could be used for lending all kinds of things, even assets that are securities at some point, of course, with the right regulatory coverage on that side. But you could be lending stocks, you could be lending bonds, you could be lending commodities, you could be lending foreign currencies. There's a gazillion different things that you could be lending using the same technology. And that's part of what's exciting about the DeFi building blocks concept, is if you build a protocol like TrueFi, or you look at Compound, you look at Aave, you look at Uniswap, SushiSwap, right? These protocols, they are generalized ways of transacting ERC20 tokens in specific formats that make sense. And that can be applied to any sort of asset. And that's the beauty of the kind of plug-and-play nature of these protocols.
Rafael, it's been an absolute pleasure to have you on to Crypto and Blockchain Talk. I hope you enjoyed yourself.
Thank you. I very much did. Aviva, you're a phenomenal host. It was a real pleasure.
That's really nice of you to say. No, I really appreciate it. And we'll probably, if you'll let us, if you guys have anything going on, we'd love to have you on again.
You got it.
Awesome. Well, I'd like to thank all of our listeners for tuning in to this edition of Crypto and Blockchain Talk. Please remind yourself to tell your friends and family that they too can download this beautiful podcast on one of over 70 different podcasting platforms, in addition to our sister radio station, crypto24radio.com. Crypto24radio.com plays 24/7 around the world, and we broadcast news, music, these beautiful podcasts, and so much more. Furthermore, you can contact us through Facebook, Instagram, and Twitter. But first and foremost, and before anything else, we want to hear from you directly. So please email us at education@savvydigital.com. That's education@savvy, S-A-V-I-I digital.com. And believe me, when you tune into us, you have no idea how much we appreciate it. It really does not go unnoticed, and we really do care about our listeners and our fans. So please be safe, take care, and goodbye for now.